Paul. Marco, I'm a big fan of the line of research, which is really trying to understand what drove the crisis. And I think the idea in general of looking at the supply of credit is obviously a real challenge because of this problem of is it was a national credit shock, was it a local credit shock, and how do you disentangle these facts is particularly hard in a macro context to try and understand how important these issues are. So I'm going to go to kind of a second piece, which is really related to how we think about the crisis. And this is going to be a much less technical talk and is what I think of the very early stages of a book that I'm working on with hopefully this or somewhat similar title, but hopefully somewhat provocative, which is really the question of how should we think about home ownership in this country? Is this something that's the American dream? Is this something that is, the global dream? Recent surveys suggest that people still talk a lot about it. Or is it really an outmoded tenure choice that locks people into properties where they take on a lot of leverage that they can't afford and puts them into circumstances which just exacerbate problems, which would be kind of the alternative view of the crisis. So what I'm going to do is kind of go down 4 issues. The first is just kind of give you a little bit of data about the housing market and home ownership today. Probably some of this is stuff you've seen or kind of have a sense of. I'm going to make the case why I think America does need to continue to support home ownership. And I'm saying that only because I'm in the United States, but if I were in other countries, I would make a similar case to this. And in fact, actually, I just looked at recent data. If you look at Europe, for example, the U.S. would have, even at the peak of the crisis, or at the peak of home ownership in 2004, the U.S. home ownership rate would be below the average of European countries. And lots of countries have lots of policies about home ownership, but the United States rate of home ownership in a global sense, at least among developed countries, is not particularly high and is dropping a lot relative to some of those other countries. Then I'm going to talk about sort of key barriers to home ownership and maybe why we should think differently about this question or potentially think differently. And then I'm going to end with some at least thoughts about policies. And I really hesitate to talk about financial innovation in a world where we think about financial innovation as being kind of the equivalent of a 4-letter word. But Paul, for example, has done a lot of what I think is really compelling work about how you can create sort of a hybrid product that is a more stable type of capital, provides more stability from financial institutions. So my view is we shouldn't just because one particular kind of innovation, which wasn't really an innovation, which is these kind of subprime loans, we shouldn't conclude from that all innovation is a bad idea. We should just get rid of financial innovation altogether. I will say as a caveat to that when Paul and I and Dean Hubbard and a couple other folks used to teach a class on the future of financial services a number of years ago, and I would always start my portion of the class by putting up a bunch of slides about problems with subprime loans, all of which were taken from the 1980s. So almost all of the idea of no-doc loans, appraisal fraud, all this stuff, it's not like that was a new thing. That all existed in the late 80s as well, just not to the scale that it did this time. So you probably read in the papers lots of cash purchases of houses. Recent data suggests that as many as 50% of the transactions that are taking place today are cash transactions. You can look at certain markets in particular, southern markets which suffered a lot from the crisis, and that number is really a low estimate, and you probably read, Blackstone is now the largest landlord of single-family homes in the country. They own 30-some-odd thousand homes, and you have several public companies, not Blackstone, others, that are trading with the idea of buying homes and renting them out. What's interesting, though, is if you look at some of their business plans, it is unclear whether the business plan is actually to sell these homes back. Almost all of them have rental programs with a path to home ownership, or whether their plan is to continue to operate these homes as standalone rental properties as a whole. If we look at the home ownership rate, that has been coming down rapidly. And in fact, it is pretty unprecedented to see a decline in home ownership of 400 basis points with about 120 million households. That's the equivalent of about 5 million households losing home ownership over about a 5-year period. That is a really, really stark number. It's much higher than the actual loss in foreclosures, which is somewhat above between 3 and 4 million, depending on, you might think that's an easy number to get. It turns out not to be as easy as you'd think. But, it's a very, very sharp decline. It's not only a sharp decline because of people losing their homes. Many people who are younger are not attaining home ownership at an age when you would expect them to. And household formation in general, that is people who are not living with their parents or not grouped in other living arrangements, has fallen as much as half. And it's recovered a little bit, but is still at a very strikingly low level. One of the first things that should sort of cause you to question a little bit the standard story is just to actually look at the data a little more carefully. So the first thing you see is the peak in home ownership was 2004, not 2007, when the housing bubble and most of the bad loans that were originated, the median down payment on a subprime loan between 2005 and 2007 was 0. Literally, the median loan on a subprime had no down payment. But at that same period of time, the home ownership rate was actually declining, not rising. That's sort of a first hint that the people who are buying homes over this period, and I've done some other work in my the last time I presented in this forum, I did some work on the role of investors in home prices. And you can actually get very striking causal estimates that the influx of investors substantially raised house prices, and this is sort of, why did home prices in places like Vegas and Phoenix go up so much relative to other parts of the country? And investors clearly, I think, played a causal role in pushing up home prices. What's interesting, though, was the beginning of this was not the beginning of the subprime lending. The beginning of the rise in home ownership in the United States was '94, which coincidentally tied into a period of time when long-term interest rates went on a large secular decline. And in fact, you can see globally home ownership rates and house prices rising in many parts of the world, not just in the United States. And interestingly, the secular decline in home ownership over this period was most striking during the period when interest rates were rising in the late 70s and early 80s. So if you just run a regression of this stuff, which you shouldn't believe at all, and just kind of ask what is the simplest thing that explains home ownership rates in this country, up until relatively recently, you would have said it was interest rates, not the supply of credit, in terms of what was driving, at just kind of a simple level, what was driving the run-up in home ownership. You would have said interest rates and decline in real interest rates in particular, and if you looked at other countries, you would come to that conclusion in an even more striking way. So, despite all of that, the question is this really our future? So I can make academic arguments about all of this, but the question is, what do we really think, and are we heading to this? So one of the things I think is interesting is just to try and disentangle not home ownership at a point in time, which is what the rate is, which is a percentage of all people who own a home, but kind of ask, what is the lifetime home ownership rate? What are the chances that at some point in your life, if you're an American, that you are likely to own your own home? And as a proxy for that, let's just look at the age where the home ownership rate peaks, and where is that? So interestingly, if you look, the peak home ownership rate in the United States is for people aged 65 to 69, and that home ownership rate peaks at about 86%. 5 out of every 6 people. This is not middle class or upper middle class. This is lower middle class. In fact, if you look at high school graduates, more than 2/3 of people who never graduated from high school, who are aged 65 to 69, own their own home. So home ownership in the United States is not something that is a middle class subsidy. And in fact, most of the people at the bottom are people who don't benefit from any of the tax subsidies we have, because the mortgage interest deduction only works if you itemize on your taxes. And if you're a low enough income person, you don't actually itemize. And if you live in a state that has very low state taxes, there's even less of an incentive to itemize. So these are people for who, the most part, the kind of subsidies we often talk about don't exist for home ownership, but nonetheless have become homeowners in this country. And if you look at a lifetime, my guess is that if you ask them, did they ever own at some point in their life, probably be about 90% of all Americans. So why do we need home ownership? Why is it that most Americans intuitively become homeowners? What is it about home ownership that's important? Well, I think if you kind of ask yourself, put yourself in the position of a 65-year-old, and put yourself in the position of a 65-year-old who hasn't made a lot of money, you can sort of say the 65-year-old is sort of like some of my in-laws. My wife was the first person in her family to go to college. And in fact, her first job, she made more money than her parents did out of her first job in graduating from college. Her parents live in Reading, Pennsylvania. They're divorced, which in the data is the worst thing for home ownership. But what it turns out is they both own their own home. And in fact, my father-in-law just retired at age 65. And he has some savings. But he and his wife are living off Social Security. They do a little bit of work. How is it possible in a home, by the way, that doesn't cost $100,000? How can you possibly afford to retire in that circumstance? Well, the answer is you own your own home, you fix it up, and you have some money put away in a 401k. That actually, not only is that a retirement, that is a retirement that most Americans actually live. And for people who are ordinary people who are not, in New York and California and these, having seen these hugely appreciated home prices, that's a retirement that most people can understand. You can only understand it if you've paid off your mortgage, because if you have to make mortgage payments, that's a problem. But if you've taken a 30-year fixed-rate mortgage and you've paid your mortgage down to zero, and you have Social Security, particularly for a couple, so two people worked and they both have Social Security, that is a way that you can afford retirement. But if you ask yourself, suppose I didn't own a home, what would I do? What's the risk of making rental payments? So the cost of paying off a home at retirement, average property taxes and insurance are somewhere in maintenance, 2 or 3% of home value. But for those of you in real estate, you can't rent anything at 2 or 3% of property value. So rents are going to be much higher than that. And by the way, you don't know how long you're going to live, so how are you going to manage your assets with a 4% payout to live at age 65? Your life expectancy, one of you is going to live at least 25 years. And there's a reasonable chance that you're going to live, that one of you is going to hit 100. How can you hedge that? The risk of rents, the probability of inflation, all these other problems are really significant risks. But of course, if you own a home, you don't have to worry about those things, right? Because you have a place to live every year, and the home is hedging you against a bunch of those problems. I think that intuitively is something that most people who hit this age understand. But I think it's something that most economists don't understand very well, because they don't put themselves in the position of what it would actually be like to be a person at that age and kind of think about what they do. Economists sort of, for example, argue that people don't annuitize. Actually, owning a home is owning a perpetuity. It pays you a lifetime stream of rent. Actually, it pays a stream of rent beyond your lifetime. It's as long as the home lives. There's some cost to carry that, but it's a very different kind of calculation. And so I think, if you think about the arguments about home ownership, I think first and foremost, these are arguments about stability. They're about personal stability and financial stability. And the alternative, and if you look at countries which do not have high home ownership rates, and I'm still doing more of this work, there are countries like Germany and the UK and Switzerland in Europe. And they have very large public housing systems. And so we could go a route where we're going to have a large public housing system. But if we don't, the question is, how are we as taxpayers going to manage the risks associated with people who are in this condition if they have not been able to accumulate wealth and hit a stable circumstance of owning a home? So that's my pitch. So then the question is, what's wrong with this pitch? And when we get to questions later, I'm happy to have you add to the list of arguments on here. These are the arguments, the most common arguments I've bumped into so far. Government policies caused the crisis. What would we want to do this again? Irresponsible homeowners caused the crisis, more specifically. Households can't afford to be homeowners. You put student loan debt into this category, among others. Housing is a risky asset, so why would you push people to take on ownership of a risky asset, particularly, again, coming out of the crisis? And then finally, that the job market has changed, and what our parents and grandparents, depending on your age, worried about is a very different set of risks than people worry about today. the attachment to one location and one home may change the calculus in terms of owning versus renting. So that's my laundry list of issues. So let's kind of go through each of them. The first is government policies caused the crisis. This is actually one that is pretty, I think, easy to debunk, despite the sort of arguments that I think Marco's point is completely right, which is the existence of subprime lending. Regulators could have stepped in and limited that, but I don't really think of that as kind of, most of the people, for example, talk about Fannie and Freddie or subsidies for pushing, banks to do low-income lending. And those arguments are clearly not the case. So Fannie and Freddie shrank their lending share in 05 to 07. It is true they bought some amount of subprime securities. They were in no sense the marginal buyer of those securities. As we've discovered in the crisis, the marginal buyer of those securities were actually CDOs that were sold in Europe and elsewhere, and that are the riskiest tranches of those things, and those have basically been destroyed. So the $800+ billion CDO market, 500 billion or so are eventually going to be completely written off. That was the buyer of the incremental securities in the subprime mess. There have been great studies that use exactly the same definition that Marco did to look at Community Reinvestment Act. So if you look at a neighborhood, a census tract that has low moderate income people in it, and look at the census tract next to it that doesn't, one qualifies for CRA, the other doesn't. You compare house prices in the two, you compare lending in the two, and you find almost no evidence. None of the kind of discontinuity that you would see across these state borders. You don't see those kinds of discontinuities across CRA eligible and non-CRA eligible neighborhoods. So there have been a bunch of things that have been done. Now, it is true that we're going to spend $180 billion bailing out Fannie and Freddie. They will, by the way, more than pay us back, which is another problem, so to speak, for us from a housing policy perspective, but that's a problem for another day. But clearly, the government policies, to the extent they existed, were really allowing subprime lending at all. But we're really supposed to be fairly sanguine about that because, Spanish bank regulators didn't step in, UK regulators didn't step in. I can point to, a dozen countries which had housing bubbles that had different regulatory systems. And so we could blame regulators, but I think it's a little more sophisticated picture than just having the view that it was US subprime and bank regulators in the crisis. The second is that irresponsible homeowners caused the crisis. And again, you're supposed to be skeptical of that view because I just showed you that the homeownership rate was declining, not rising, at the period of time when the worst loans were done. To my mind, what I would sort of say is the striking feature of the crisis for me is why most homeowners didn't walk away from their homes and why so few did. So at peak, more than 20 million people were underwater. More than 70% of people in Las Vegas with a mortgage were underwater. Every economist and financial pundit on the planet was on TV telling people, you guys should all walk away from your loan. This is exactly what Wall Street did. They walked away. You should walk away and get your bailout. The striking thing is how few people did it, not how many people did it. And given that we went through the worst recession the worst recession since the Great Depression, and we only had 3 or 4 million people end up losing their home to foreclosure, the striking thing to me is how low that number is. That number could easily have resulted in a complete catastrophe and a blow up of our financial system had it not happened like that. Households can't afford to be homeowners. This, to my mind, is by far the biggest, most credible issue. And if I had more time, I'd talk about student loan debt and other things and how it plays into this. But the key thing to kind of think about it is everybody, the people who have student loan debt are not homeless, they're living somewhere. And so the issue of tenure choice is really about how to finance the place you're living, more than it's explicitly about whether you can afford to be a renter-owner, because people are making their rental payments regularly. They may have they may have total debt to income ratios that are higher than we would like and higher than they've been historically, but that doesn't mean they can't make regular payments on something. And the question is, can we design mortgages and other programs that allow them to get into home ownership and accumulate wealth in a responsible way? And so I think that the challenge of this is going to be thinking about data-driven, creative solutions. And I wrote a case once about how 228 Loans also started with some nice idea about how to do them. But how do we help people build wealth? And I think this isn't an argument against homeownership as much as an issue about how to think about it. The last thing is just the inflexibility of the job market. I agree with that view, but it's also one that is eminently fixable, which is you could have a portable mortgage which allows you to go from one place to another. I don't have time to talk about how it works, but I've done a fair bit of work thinking through and kind of developing ideas. And these mortgages do exist in other countries, including Australia and Canada. So it's not like this is an innovation that's never been tried. Housing is a risky asset. The short answer is you always have to live somewhere, and everybody doesn't wake up in the morning and mark to market the value of the home. They get up in the morning, go downstairs, make their coffee, and go to work. If you're underwater in your home, as we just pointed out, most people just continue to live in their home, and they got exactly the same benefit of living in their home the day before the crisis as they did the day after the crisis. And if you're going to be in a home as a lifetime, the risk you have to think about is not the mark-to-market risk of your home today, it's what is the risk you're facing over your lifetime, and how do you think about that risk in a lifetime perspective? It's a very different question. There are barriers to overcome. I've talked about a bunch of these, but I'm going to sort of try and finish up here. I think these are all issues, but I think all of these issues, whether it's falling wages, stagnating, middle income, et cetera, once again, are about the amount of money you would spend on the home, which is to say, if my wages are lower, I'm going to live in a lower quality place. It may be smaller, it may not be located as well, but it doesn't mean I'm not going to live somewhere. And the question of home ownership is, how do I afford that? Recent surveys suggest most Americans continue to believe as I've described it. The final thing is just to think about policies. I think there are many kind of policies, if you have this frame of the problem, that you would take on that are very different in some cases than the kind of policies that we are actually pursuing. And in fact, somewhat my policy agenda is almost orthogonal to the policy agenda of many people in Washington. The first is, I think we need to establish a path for responsible home ownership that takes into account the current circumstances of the labor market and the financial markets, as opposed to taking the view that we don't think home ownership is a viable option. I think we should be aware of speculation, and if there's one thing that is not talked about nearly enough in the crisis, it's how important speculation was. Non-owner occupants, CNBC cameramen who interviewed me talking about the multiple homes they own, those are the things I think that are just really under-discussed in terms of what led to the crisis. And by the way, a general model of bubbles thinks a lot about non-dedicated investors going into markets they're less informed about. And again, whether we talk about the internet sector, whether we talk about biotech, great paper by Gore Huberman on sort of, front page of the New York Times, all of a sudden some biotech company goes crazy. It's the non-dedicated investors that I think we're starting to discover are a bigger destabilizing force than we used to think about. Get rid of HELOCs as much as we can. We should not be subsidizing people pulling money out of their home. We should be encouraging people to build wealth inside the home, and tax-free debt on a home that isn't true on your credit card is a really bad idea. And finally, I think that there's just some nice innovations. Portable mortgages, hybrid ARMs with prepayment restrictions. Prepayment penalties actually are, I've done work on this with Tomek Piskorski here at the business school. Good thing for low-income borrowers, not bad. Why is it? Because low-income borrowers are less sophisticated than other people. And so if you give a bunch of people an option and only the most sophisticated, well-to-do people exercise that option, it actually turns out that it's priced in a way that essentially is disadvantageous to the sort of the people that in some sense you'd like to help. And so actually the 30-year fixed rate loan, I think, is not a very helpful thing to the people that we would like to be helping. And we know that because the loan doesn't exist in other countries that actually have much higher home ownership rates than we do. And finally, we can adjust mortgages to the price level and economic conditions so that you don't have these moral hazard problems. So I'll stop there. I think we have to move beyond ideas that are really about sort of fixing problems in the crisis that didn't exist. And we really need to think a lot harder about home ownership. it's something that I think most ordinary Americans do, and in every country in the world they do it, which is why most countries have policies that are supportive of homeownership, because politicians ultimately respond to the people who put them in office. And that intuitive idea is something that is very far from an American phenomenon. So I will stop. Jonah's up on the teacher's front.